Did you know that on Friday, it was the first day after 9 days, finally the stock showed a breathing room, a upward momentum, 10%. The stock was up 10% on February 17th before it came down a little bit. Now, this is a great sign if you're looking to make money. Let's talk about some of the fundamentals, which is a great indicator why we're going to see a lot more of these coming week, okay? Let's talk about the failure to delivery. In January, there were over 25 million shares worth about $100+ million were failed to deliver. If you don't know what failed to deliver is basically when two parties get into a contract. Let's say you and I get into a contract and we go for a put option. And you're betting the stock price is going to be $2.87, okay? And I said, okay, if the price get to $2.87, I will pay you 6 million shares. When the price did get to $2.87, you want to exercise your option. You want me to give you the delivery of 6,000 shares. And I said, you know what? Actually, I don't have the shares. I just made up the contract, sold it in the market. I actually don't have. They might have put down some collateral, but they do not have the actual shares to give you the shares back. This is failure to delivery. What they need to do at that point is they would need to go to the market, buy the shares at the current price, and pay you the shares that they owe you, right? This is a legal matter. Failure to delivery, over 25 million shares. That still has to be covered. Not everything is covered yet, okay? So which means we will see a good spike in the price upward momentum because when somebody buys a share in the market, price goes up, which is right here, for example. Stock was hovering around $1.78. 14 million shares were bought. Stock went to $2. All right. Now let's look at the cost to borrow. Another indicator, great indicator that tells me the stock price is going to go up from here. For the folks that don't know what cost to borrow is, when a company is not doing good financially, they will borrow the share from a broker, sell it in the market. When the share price comes down, they'll buy back the share and pay back the broker, the share and the fee, and take home the profit. In this case, the higher the fee is, most likely the price of the stock is going to come down. The lower the fee is, the price of the stock is either going to consolidate or is going to go up from there because there's not a lot of demand for borrowing the stock at that point. Either they're purchasing the stock or they're just, not shorting the stock, okay, in that case. So the fee is 105%, a lot lower than, 375. The stock was 9 days ago was 375. Now it's down to 105, which is also a great indicator the stock price is going to go up from here. Institution holdings, 46.28%. It was coming down. If you've seen my daily videos, if you're not subscribed, you could subscribe to the channel. You get daily updates. On my daily videos, they were at 46.16%. They're at 46.28%. It should have been decreasing if the company's going, down. They're not going bankrupt because they already got the institution offering. But what I'm saying is, if the company was really doomed, per se, this institution holdings would have started coming down. We will see a negative on this, but it's not yet. It's still positive. They're still buying more than they're selling. Again, there are a couple of levels I have here for the resistance. It has to cross that $2 resistance, $2.29 resistance before it get to $3. Now that $2.29 is a hard resistance because it comes from January. To cross this, you're going to need a lot of volume to cross this resistance. Okay, what resistance really is, this is where a lot of supply is. This is your demand. What support really is your demand. When you come to this support and you see how it keep coming down and keep touching this level and keep bouncing off of this, which means there's a lot of people or institutions are sitting at this point, have their order triggers around this area because they think the price of the stock at this point, $1.75, $1.77, it's a great price. If at that point, whenever it comes down to that level, order gets triggered and the price bounce back up. Right here, there's a lot of supply right here, which means that when the price gets to this level, order gets triggered and the price comes down. If there are people that think the price should be greater than $2, they're anticipating the stock to go even higher. The stock will cross this resistance, go to the next resistance. This right here, there's a lot of supply here, which means, crossing this is going to need a real push. Okay. But if it does cross this, the next way up is easier. It could get to $3 without much of a hurdle. Whatever the orders are there, they're not going to be there. Whatever the new buyers come in, they're going to keep pushing the price up. But I'm very optimistic for the stock for next week. And I think you should also start looking into the stock. If you're not already looking at the stock, you should start looking at the stock, because next week is going to be very crucial. And I think we will see a lot more of these green candles coming up in the first 30 minutes or maybe the last 30 minutes of the trading day. But again, hope you guys like this video. If you're not subscribed, do subscribe to the channel, and I'll keep you guys posted on the next update. Thank you.